use all your available credit. This is really the key to boosting up that credit score. Try to keep it under 50% of the limit. So if you have a high credit limit of $1,000, you don't want to exceed $500 spent at any point. That's ideal.
So John, let me ask you a question then. So you're telling me that if I get a credit card and they give me $1,000 limit, you are saying that I should not use $1,000 worth of credit?
Well, here's what happens when you have a $1,000 limit. The way that one of the things that factors into your credit score is how much of that you've expended. So if you're above 50%, then it's going to have a negative impact on your credit score. If you're above 70%, it's going to have a dramatically negative impact on your credit score. But here's where we want to get you to. We want to get you to below 30% if possible. 30% or lower is going to dramatically increase your credit score. So right around 50%, it's going to keep your credit score where it is. At 70+%, it's going to really hurt your credit score. But if you keep it to about 30% of the high credit limit, then that's going to help to improve your score. And I'm going to throw just a quick bonus tip out there. If you're in a situation where you need to raise your credit score, in a short period of time, maybe you're shopping for a house or a car, and you want to make sure that your credit score is as high as possible, take a look at what your balance, your high credit limit is on a lot of your cards, or on a couple of your cards. And obviously you want to focus on the ones that you have a solid payment history with. Call your credit company and ask them if they'll increase your credredit line.
Without doing an inquiry. Without doing an inquiry on your credit, though.
Right. They shouldn't have to do an inquiry on the credit. If it's an internal, process, they should not have to do a full credit pull. Ask them if they can increase your credit line. By doing that, what that's going to do is that's going to improve your credit score, because you could put a little more distance between your balance and the high credit limit.
Right. And while you're transitioning to the next slide, what creditors look for when they're measuring your credit score, they look at the aggregate or the total of all of your credit card balances versus the limits. So it's not, on one credit card that they're looking at. If you have 3 credit cards of a certain limit and they all have a certain balance, you just want to add up and see what the percentage of their balance limit ratio is, and you want to keep that number, as John said, to 30% or less, ideally.
Right. Ideally, and that's the goal. You want to get as close to 33% or below as possible. So what are you going to look for with a credit card? This is something that a lot of people, they get a lot of solicitations for credit cards, but they don't really do a lot of research themselves. So here are just some things to look for. The APR for purchases, what you want to look for is the teaser rates. So an example of a teaser rate is 1.99% or 0% interest. Now, we all know that a bank is not going to give you money, and that's who all of these credit card companies are, essentially, is their banks. They're not going to give you money at 0%. So they may give you that money for a short period of time at 0%, but you need to read the fine print to determine when is it going to adjust to the 18, 25, 27%. That's going to be the actual interest rate. So that's why you want to look at the APR disclosure that they have to send you.